Hello everybody, welcome to the weekend edition. It is your Friday session. Cheers, happy Friday everybody out there. Hope you have a nice frosty cold beverage and enjoyed a little tumultuous trading week and a fitting end to have a nice little sell-off for some of these major market indexes, of course, as we go into a very uncertain weekend with regards to inauguration, political uncertainty, and of course earnings season kickoff, which I'll talk about today. Yes, Koja's show just started. All right, I'll do a total open platform today, so if you guys have questions, hopefully I can answer them. As you know, I can't answer everything because I'm not that smart, but I will try my best to get to as many questions as I can. For those of you who sent in your questions over the last couple days, thank you so much. That will be kind of the focal point for today's show. So I thought I would start off kind of doing what we normally do with regards to market roundup and kind of getting a sense of what's been happening with different markets for the week. Then I'll go into listener questions, and then we'll go back and dive more into charts as need be. So I'm going to start things off with the bottom of the list here and go to Bitcoin. Obviously, we've heard a lot of mixed talk about Bitcoin. One day it's going to 100,000, the next day an analyst says it's going to zero. Look, you just got to be ready for that type of, I guess, uncertainty with the crypto space. Today was a pretty ugly day. You're down about 8.42% for Bitcoin to 36.27. If you notice the price swings over the last week, it's been pretty phenomenal. I mean, these are just some monster moves. Hopefully we'll get a footing here and continue to move higher. But right now you're seeing down about 8%. And I think it's kind of interesting. Some of you may have read a lot of these headlines about different cryptos and why people are losing so much money in them and how they're losing their private keys and that's just disappearing. Maybe some of you guys got to see it was some British kid, some British IT guy who back in 2009 and 10 was mining Bitcoin and apparently had something like 7,000 Bitcoin on a hard drive that he just threw the computer away. And of course, that computer is now sitting in a landfill in the UK somewhere, which has an estimated value of $270 million right now. And this guy is trying to petition to excavate the landfill to find this hard drive, reconstruct it so he can get that Bitcoin off of it. Just tells you how crazy that space is, and certainly one of the concerns that people have. I'll talk about that today too, and how you can kind of be safe and protect yourself in that crypto world. So Bitcoin, obviously, by far the big underdog, the loser on the day, but I think that'll all come out in the wash anyway. Number 6 on our list is going to be crude oil. Big, ugly red candle on the crude oil futures today, down 2.78%. Still looking great. I still maintaining that target. I'll bring up that weekly. And that target for me is getting it to $60. I still think we're good to get there. If we look back to this daily time frame on crude oil, I'll zoom out here so you guys can see that one. You know, we did come up to an area right around 55, which we talked about on the program the other day. I do think that that's your next logical target, it's 55. And then really, it's higher than 60, actually. It's right around 61.50. To me, that is the next two stops you have. So a pullback here in crude oil should be expected. I actually think where we're at right now, as far as where we sold off to, I think that's a good point to maybe be acquiring if you're looking for the long-term move up in crude oil. Anyway, that's your number 6 performer. Number 5, you might want to get a pen, everybody, and mark your calendar down here. I think you want to, make a note because Russell had a down day. That's right, folks. It was a down day. It seems so rare. It's like finding the elusive chupacabra. Russell was down to 2,112, down 1.92% on the day, really just erasing yesterday's gains. All in all, it still looks incredibly strong. Now, gold throwing itself in between some of these indexes here. Here's your daily on COMEX, and gold obviously had a lot of volatility recently, down 1.28% today to 1827 for the session. And, I look at the bigger picture here, it still feels like it's just drifting down. That high we bounced off of and came ripping down off of about a week and a half ago, that was right into a supply zone. Right now, you're sitting kind of in a demand zone, although it would not surprise me to see this challenge that 1778 mark, which is just below us. We still are, for all intents and purposes, on a slight downtrend from back in August. Moving to our top 3 podium time, we've got the S&P 500 down 1.19% on the day. Really, on the grand scheme of things, no big deal. It looks ugly, it looks horrific, but when you put it into perspective, it's a small little pullback here. So no big deal for what we're seeing with the S&P 500. Down 1.19%. Number 2 brings me to the NASDAQ 100. NASDAQ 100 actually looks a bit weaker. Notice the last few days for S&P. It's made these kind of lower highs, lower lows. To me, the magnitude of the sell-off started earlier with the NASDAQ, and I think that what you'll see is more of a rotation. I think we mentioned this a couple months back where we felt like, or I felt anyway, that a lot of these FANG stocks got a little bit long in the tooth. Now we're seeing them somewhat traverse sideways, and I think some of that money is going to start to pull out because the growth is no longer there. That money will pull out and go into other areas of the equity markets, which I still think is going to be to the bullish side here. So it looks still very strong to me. Now the big one, not really a big one, it was up 0.26%. That was the 10-year Treasury notes. That means that if the price of this bonds are rallying, that means that yields are falling, which is good because we've had such a tremendous move up in the yields over the past 8 months. That's your top 7 markets there, and I will stop with that. All right, what else we got? Gary says 2112 Grush fans. Yes, old Neil Peart, great album there. I'm going to go to list of questions and show you what I got cooking here from some of the viewers. It's a real mixed bag today, and I'll try to keep it somewhat concise. If you have more questions, let me know. Oh shoot, I didn't put the name on here. Sorry, you asked this question. I didn't put the name on there. I think it was Heather. I'm not mistaken. Heather says, I received notice that Coinbase is dropping Ripple. Why? We talked about this the other day, but I'll explain a little bit more clearly because I think it's pretty important. There's been an issue with Ripple because the SEC is claiming that it's technically a security. So Coinbase doesn't have the authorization to technically sell a security. These other ones, they're considering them to be like Bitcoin and Litecoin and Ethereum. They're calling those currencies. So you're trading currencies there. That's a little bit different. If it's a security, it's got to be regulated. It has to go through a whole bunch of different rules. So the SEC now is in lawsuit or is suing them, and we'll see what happens in court, claiming that they're a security. So anybody in the U.S., what you're seeing is pretty much all U.S. exchanges going, hey, we don't want the responsibility or liability of selling Ripple on our crypto exchange because technically that should be sold on a different exchange that's regulated by the SEC. Now, the original problem here is because Coinbase got sued by somebody who bought Ripple through Coinbase and says, well, you guys knew that Ripple wasn't a security and you sold me something illegally, and he's suing Coinbase for it. He'll probably win. I actually think maybe I should join that lawsuit as well. Why not? Get a couple bucks out of the deal, even though I bought it at my own risk and knowing that what I know about Ripple. Anyway, that's why it got dropped. You're seeing exchanges like different exchanges around the world aren't under that SEC regulatory scrutiny. So for many of them, they're like, we don't care. You know, some of these Asian exchanges are going, we'll keep Ripple. We don't care. SEC has nothing to do with this. So different countries around the world having different rules. To me, that would be that's the main reason why you're seeing U.S. exchanges dump your Ripple coins. There we go. All right, what else do I got? Ron sent this in, and I just want to, I'm not going to really do much analysis here. You guys know my thoughts on Tesla. It is just to the moon, and you're hearing more lofty forecasts. I saw something today that said the price target from one of these analysts is $1,250 per share for Tesla. Incredible. Ron says, can you analyze Tesla for me? Thank you. I'm not going to really analyze it. I mean, just look at the price chart. Here's TSLA. I know we've got some permeable Tesla fans in the audience, and that's awesome as well. The formation that it's forming right now is actually a very bullish formation. I know it seems crazy to say that, but even after this huge, unbelievable rally, even after it was added to the S&P 500, and keep in mind, folks, since they made the announcement that it was being added to the S&P 500 to where we closed at today, it's up over 102% in 60 days. So pretty impressive move up there for Tesla. Pattern-wise, this pattern that you see right here, and let me see if I can do some artwork. It's a little bit different in TradeStation, so we'll try to do it here. Here is what you would call the pole. I'll do the pole there. There's your pole, and then this would actually be considered a bullish flag formation. Some might call it a pendant formation. But what you can see there, that downward line that I drew, is just going through the most recent highs, and I'll do the same thing going through these most recent lows. And you have this a pennant formation. Some would call that a symmetrical triangle. You know, it's fudging the numbers a little bit. But anyway, you guys get the gist of what I'm trying to convey here. Is that's a sign of strength. Until it starts to make some new lows, you know, I hate to say it, it just looks like Tesla's going to be going higher. My gut tells me it's going to start making some new lows, but my gut was very wrong last year. And I'm with Brandon out here. I won't touch Tesla. If there's only one thing that I would be doing on Tesla, and this is just me personally, this is not financial advice, but I'll tell you, the only thing that I would be interested in doing with Tesla right now would be going out and buying put options. I'd be looking at buying some put options long term, give me something 6 months out there, because this party is just crazily inflated. But people keep pouring money into it. We can blame the Robinhooders all we want, but let's be honest, Robinhooders aren't the one that's moving this. It's institutions. It's these institutions that are buying at these high prices and raising their price targets to something like $12.50, and all of a sudden that brings in more retail people, and it's like this. It feels like a Ponzi scheme to me, given the valuations. However, it's not a Ponzi scheme. We know Tesla is delivering on their service. They're delivering on their products. They're innovating. So, hats off to Elon Musk having accelerated to the richest man in the world in a very, very short period of time. Until I see Jeff Bezos on Joe Rogan smoking a blunt, I don't have much credibility. I'm just kidding. Gotta love Elon Musk. Crazy guy. Anyway, that bullish flag formation, it is a powerful one. What you really want to look for with this is here. If you get Tesla a close below $800, I think that is, to me, where you draw your line in the sand and say, okay, this thing's going to start to fill some of these gaps. I do think that you're going to see this drop significantly once it breaks below 800. But until it does break below 800, your bias would still be to the long side. But again, I'm with Big Eb. Tesla's a kryptonite for me. I'm not touching it. I'd leave it alone unless I buy put options. And if I do buy some put options, guys, I will let you know when that happens. I almost bought some last week, but they were just so expensive. It's crazy. Randall says, I like the cars, not the company financials. Yeah, the financials are absurd. Any financial analyst is going to look at those numbers and go, hold on a second. This doesn't make any sense. I mean, how does this have this valuation? The cars are great, but we've talked about this one months ago, where if you look out at the landscape, they're the dominant player right now. And the name we were bringing up would be something like the Hondas, the Toyotas. They have all the infrastructure to build regular fossil fuel vehicles, but if they get to that point where they can do a little conversion, all of a sudden they're doing hybrids and electric vehicles, Tesla has some serious competition. Now, let's be honest, I think that the Prius, I apologize for any Prius owners out there, I think it's one of the dumbest looking cars out there. I made a joke with Larry Jacobson on the show one day. I said, it looks like a suppository with 4 wheels. I think the Prius is ugly as hell. Hopefully Toyota will get better about that. But I'm not concerned so much about Toyota and Honda. You look at China. China has dozens of electric vehicle manufacturers cranking out some pretty nice products. I actually spent some time last night. I watched some reviews of them. There's actually one car company out of Santa Monica that looks really nice as well. And all of these will ultimately create competition for Tesla. I think if you're looking to ride the electric vehicle train, I don't think Tesla's the one. I think that money flowed in there because they were the one. Now they are one of many, and I think some of these other Chinese competitors put a nicer vehicle. It wasn't even NIO, Richard. There was one out there called BTD. It's Warren Buffett backed, by the way. It's called BTD, which stands for Buy the Dream. They put some really nice vehicles out there. Yes, and Alex says, don't sleep on the Rivian. I like the Rivian truck. Honestly, that's one of the few out there that I looked at and said, I'd buy the Rivian, but first thing I would do is I would go and change the headlights on that car. I don't know if you guys have seen the Rivian. It looks so dumb, the headlights of the Rivian. But I love the truck. I think it's a great looking truck, especially for anybody who's outdoorsy. But again, all that means is we now have choices. If you wanted a good electric vehicle, you had to buy something that was hideous looking like the Prius that worked, or you could buy something that was extremely stylish, much more expensive in the Tesla. Now, I'm also reading a lot about stuff with Motor Trends that says the reliability of the Teslas is awful. It's the lowest rated vehicle out there with regards to reliability, so careful with that one. Anyway, I think that a lot of this is going to increase that competition in space for Tesla. So personally, not only would I consider shorting Tesla, that's the only thing I would do, but I think that there's going to be a lot of other stuff out there that looks well from a long-term perspective to buy. Unfortunately, a lot of it's in China. I know NIO is one of the major ones that's listed here in the U.S., but there are some other ones that look much, much more attractive there. So for the gentleman who sent in that question on Tesla, that was Ron. There you go. That's my analysis of it. It looks beautiful. If you're holding Tesla, congratulations. It looks fantastic, but I would be very, very skittish with my stop loss. All right. Patrick says, Merlin, crypto is looking good. Yes, it is. Very nice. Even the stuff I added just a couple days ago. Big Eb says that a Model S was the best car ever. Awesome. Now, do you still have it, Big Eb? Because so I think it's not saying that they're not great cars. I think that the performance looks amazing. All the interior, they look amazing. But it's the long-term, maintenance pieces falling off. And I'm just curious because I haven't owned one. It's just stuff that I've read. All right. Yeah, Brendan, and again, this is also from the investment perspective, and Brendan's spot on here. You've noticed that some of the biggest movers, and I think Alex, who's with us today, he was mentioning a stock that he purchased a few days ago that was in the battery, I believe it was the battery industry. You're seeing a lot of these SPAC companies go out and try to bring to market fledgling new car manufacturers for electric vehicles or electric gas stations, these type of things. Electric gas stations, electric energy stations. But anything to do with that EV space it's the hot thing right now. It's extremely hot. So I think there's a ton of opportunity out there. But yes, minerals and metals that are used for EV, for battery consumption, lithium and things like that, those are all hot plays as well. The question is, are they overdone? Have they been overbought? There you go, Alex. Yeah, check out, it was Gevo. Let's check out, here's another one that Alex was talking about, and this is in that EV space. You know, here's a company that doesn't look that great, and then all of a sudden, bada boom, bada bing. I mean, this thing was just ripping. And this is a SPAC, right? This is a SPAC, if I'm not correctly. I could live without my big four-wheel drive truck. Sold after 4 years. Yeah, I'm with you, Big Eb. I couldn't live without my four-wheel drive. It's funny, people are saying, hey, when you win this $750 million lottery on Friday, tonight, what are you going to buy? I'm like, I'd buy myself a Toyota Tundra, fully loaded, 4x4, double cab. That's it. That's all I want. I don't need anything else. No Teslas. Well, maybe a Tesla. No Bentley, nothing like that. All right, so there was another one, Alex, I think you were looking at that was a SPAC. But anyway, this is an example of some of the electric vehicle space. And there's dozens and dozens of these. I'll do a little more research because I think that buying an ETF for the space is probably the best way to go. I think that's probably the safest way. Okay, more questions. What did I have here? That was Tesla for Ron. All right, this one's a little tricky, so let me read the question here. Mary says, you mentioned Bakkt on the show the other day. What is that? I couldn't find any info on the web. Just because you have it spelled wrong, it's B-A-K-K-T. So B-A-K-K-T, essentially what you had was executives from the New York Stock Exchange, and this, I think, gives a great air of credibility to the crypto space. You remember last week or 2 weeks ago, I was really high on Coinbase doing an IPO, and they're going through the traditional route. They're not using a SPAC. Coinbase is going through the traditional IPO process. So that means that we will now have an officially regulated exchange in the United States to trade cryptocurrencies on, where if you're like me and you're looking for more legitimacy to the crypto space, that's a massive step. Now you have a regulated security. Phenomenal. I think it'll be one of the more popular IPOs in 2021. On the other side, you have another idea, which is like the New York Stock Exchange, which trades shares of companies. You're going to have BAKKT, which is trying to do the same thing for cryptocurrencies, but on an institutional level. So they're trying to basically be the New York Stock Exchange for crypto. They are going to be coming to market probably this year through a SPAC. A SPAC is acquiring BAKKT. I'm not sure which one. And they will bring that one to market. Now, it's a little sketchy because the IPO for Coinbase will have to go through all these regulatory hurdles, to jump all those hurdles, to come to market. BAKKT will get there faster because of the SPAC, having jumped through less regulatory hurdles, but they have some of the top brass at the New York Stock Exchange jump ship from NYSE and went over and now is running BAKKT. So, Bakkt has a lot of prospect, and I think that both of these will be very, very exciting for 2021. Let's see, Brandon said, I think there's an ETF which could capture the overall SPAC trend would be a good idea. I think so too. It's funny because I have that whole list of SPACs where there was like 144. Just create an ETF that is a SPAC ETF. I think it's a brilliant idea, Brendan. Honestly, if you could find some way to bring that one to market, it makes all the sense in the world because I don't have to go out and find a specific SPAC. If you guys don't know what SPAC is, if you might be new to this, go watch the show that we did a couple weeks ago on the YouTube channel. I'll give you the basic understanding of SPACs. But yeah, I think that might be a phenomenal idea, Brendan. So anyway, that's the gist of it, Mary. It's basically looking to be an exchange, another publicly traded exchange that is trading cryptocurrencies, which we're seeing more and more attention in that space. More and more regulatory stuff's going to come in. So as long as you start to have the correct process, meaning the SEC is monitoring those exchanges as investments, legitimacy, then all of a sudden it adds more credibility to the entire sector. And to me, that's a huge, and I'm a big fan of that. All right. Yeah, Tom, we talked about that one the other day. Tom said, we talked about, was it IPOC? I think IPOC was the company that was buying. Let me make sure. I think it's gone now. IPOC. Yeah, so IPOC is gone. That used to be the SPAC, and they bought, is it CCIV? I don't remember the ticker symbol because it's so damn new. No, Tom, it's SBE, I'm sorry. SBE bought, Switchback Energy is buying, and it's supposed to be done here soon, ChargePoint, and that's another SPAC there as well, but there's a ton of them. Yeah, IPOF, we could go on and on about these different SPAC companies. But anyway, yes, Big F says, how about lithium investments make sense? 100%. We looked at that a while back. Unfortunately, I don't have them off the top of my head, Big Eb, but we did look at lithium stocks. I think actually it was when I was doing it in the studio at OTA, maybe even back into Power Trading Radio days, but I think it was when I first started the show. We looked at the alternative energy, and we brought up a whole bunch of lithium stocks. And at the time, the lithium stocks were extremely overvalued, right? Because there was this huge demand, and everybody thinking that same thing, like, wow, lithium for these batteries, it's going to be in short supply. You get these gigafactories coming online, it's going to go through the roof. So again, it almost reminds me of the clean energy sector, which has gone parabolic. Now it's like, okay, I don't want to chase. I want to be more in line with waiting for things to pull back a little bit before I buy back into this. So, all right, what do I got? Okay, that's on Brendan. Brendan says, next stop, 46K. I don't think we'll get all the way down to 46K. Let me look at that Bitcoin chart here real quick for everybody at home. You look at this right now. It's a stretch for me to draw this, that's for damn sure. But you guys can see that these lows have, I'm just going over the past few weeks. They've been getting higher and higher. So you want that to stay intact. To me, that's critical step number one. But I feel like a close below 35 would be, kind of bad at this point. Right now, it seems like things are still just trending up and looking okay. I don't think you'll get down to 25. Right now, there's just too much positive interest in these equity markets, right? They're too much. People are just, it's the main thing that people are talking about right now. It's not even Tesla anymore. It's Bitcoin. It's crypto. I remember Mine's MSTR. This one is just absolutely fantastic, guys. I don't know. Here is one that we've been looking at. This is, MSTR. There you go. MicroStrategy. Talk about the mother of all bearish Harami formations right now. For those of you who want to know a Harami formation, you have a gigantic Harami, which is a reversal pattern on MSTR right now, but I wouldn't put much emphasis on it because if you notice right now, MicroStrategy is pretty much moving lockstep with Bitcoin because they own $1.5 billion. It was $1.5 billion worth of Bitcoin. I believe their average price was $15,000. So all of a sudden, they're now holding close to $4 billion worth of Bitcoin in cryptocurrencies. But what's interesting is people are saying that it's going to have a huge pullback. Until these companies start selling these colossally massive positions, there's no reason for it to sell off. I mean, unless the whales, the really big investors start to sell. And what I think you're going to see happen more is you'll get more interest by corporations to put their balance sheets, at least to some extent, in the crypto space as opposed to hold US dollars, which just continually drop and drop and drop. So the more companies that do what MicroStrategy is doing, which is taking some of their capital, buy crypto with it. You have Apple right now sitting over $100 billion in assets. Imagine if they took 10% of that and bought crypto with it. It's mooning the entire sector. What if Tesla did that? What if GE did? What if these companies did that? I think you'll see more of that versus companies just sitting and storing on cash. But the trend is kind of going that way, and I think that's part of the reason you're seeing such big moves up, not just in Bitcoin, but Ethereum, Litecoin, and these other assets as well. So Patrick says, so many YouTubers right now saying, run for your life, Bitcoin is dropping huge. Everybody can make a statement. Give justification. So if you're going to make a statement like that, and I'm not saying you, Patrick, but just in general, there needs to be some justification for it. My arguments for more upside than downside, they're clear to me. Anybody can have an opinion about where something's going to go, but I'd like to hear the reasons why they think it's going to crash. And the normal reason for Bitcoin is it's moved up too fast and it's fake. The challenge here is you have destruction people are losing their Bitcoins every day because they don't know what to do, and I'll explain that in a second. The second piece here is you have more and more people coming into the marketplace every day, making it easier to buy through things like PayPal and Coinbase and different apps. To me, there's far more pressure to move to the upside. Richard says, do you think that the U.S. Fed will try to regulate cryptos? Yeah, I do. The main reason that I love them, and I think Brendan probably is in this case as well, is depending on which cryptocurrency you are in, you're essentially sidestepping government. You're trying to get away from government intervention, government activity. If government wants, I mentioned this before, if government wants to freeze your bank accounts, that's done in under 60 seconds. Boom, you can't get your money. Sorry, Mr. Rothfeld, you're screwed. They can't do that with my Bitcoin, especially the stuff that I hold on, these little nano ledger S's like this. They're not going to get that, or my paper wallets. Could they freeze my Coinbase account? Yeah, they could. They could definitely do that. That's why, you need to learn more about this space and be careful with them, because I like the fact that they can't take this away from me. To me, that is what makes this very, very valuable. Now, there was something else I wrote down here. I was making notes to myself earlier. There was a Twitter conversation that went around with somebody tagged me in it saying, it was an article, I think by Bloomberg or something, saying that, more and more people are losing their crypto keys, or their private keys, losing their Bitcoin, making it extremely dangerous. Yes, and I've done multiple shows on that, on why you need to be so careful with your private keys. It's the most valuable thing that you have if you're trading crypto, is that private key. You don't even really need the address, you just need the private key. Now, so what could you do? Number one is, if you don't want to be holding physical cryptocurrency like Bitcoin and keeping the private keys like I'm doing, you could do it through one of two ways. You could keep it at an exchange like your Binance, your Coinbase, your Kraken, and they keep the private keys for you. But then again, if you do that, you don't actually own Bitcoin or whatever cryptocurrency it is. You own an IOU. The exchange, like Coinbase, they own the cryptocurrency. You don't. The next piece here would be to go to the equity markets and buy things like GBTC, right? Grayscale has a fund, it's a trust, and I'll bet GBTC, which holds physical Bitcoin. And that way you never lose your private keys either, but you don't actually own Bitcoin. You own shares of a trust that owns Bitcoin. So I hope you guys can see the separation here. I'm one who actually wants to hold the keys because I don't trust anybody. But I'm just kind of running through different ways that you could access the Bitcoin space or crypto space without actually owning the physical Bitcoin. So we have stocks, you have going to the different exchanges and having them keep your private keys. The other way is obviously go to the futures market. Here's the Bitcoin futures. You can trade Bitcoin futures. That's great because it's centralized, right? You go to centralized exchange out in Chicago, CME, doing their Bitcoin futures. Fantastic. You never have to worry about losing your private key. Then again, if you're doing that, if you're buying Bitcoin futures, you're a trader. You're specifically looking to capitalize on moves up and down in the crypto space. Like for myself, I can only speak for myself, not others out here, but I'm sure I've got some in the group here that feel the same. I'm buying into crypto not as a trader. I'm buying it as a long-term investor. Of course, if I did that with futures, I have to roll the futures all the time. I want to be holding the physical ones because my thought is that Bitcoin in 5 years, 10 years will be absolute dominant force in the market, and some of these other cryptos will be replacing things like eBay, Amazon, and other big centralized entities. And to me, that's why I'm holding on. Yeah, Big Eb says it's a good place to start with GBTC. Sure, you can work there and get comfortable with it and see how the fluctuations move because the GBTC movements are pretty damn volatile percentage-wise. And the whole crypto space is crazy. If you don't like stomach-turning moves, don't get involved with crypto. So that's pretty much it. You could buy stocks that are funds that hold Bitcoin, but you don't actually own Bitcoin. You own the shares of the fund. You could buy the futures, which again, you don't own Bitcoin. You have a futures contract. It doesn't do physical delivery, so unfortunate there. Or you could go out to an exchange, have them manage your private keys. If you're worried about losing your private key, then just don't hold them yourself. Keep it on an exchange or on a different market. Let's see, what else do I got here? This is, okay, so you guys are talking to Brendan on that one. Let me see, what else do I have? What other questions you guys have for me? Those are the main ones I had. Let me see if I have any more that came through from viewers. There are only a few that came through. Let's see. Oh, yeah, Tom, who's with us today, he mentioned this one. So if you guys have questions, feel free to type them in here. I'll get to the question in a sec, Tom. Richard says, what happens if you lose your private key? Where and or who will get your crypto funds? Do the funds have an expiration on them? No. Okay. So here's one way it was explained to me, Richard. This is going to require me to have a nice shot of whiskey. I'm on 4 roses today, everybody. So cheers. Okay, the way it was explained to me is this. Cryptocurrency, the way that the algorithms are written, basically what it does is it creates quadrillions upon quadrillions of different addresses. And all these think of it like a digital drawer. And, remember when you go to the post office and they have that wall of just little tiny lock boxes? Think of it like that. And your private key allows you to access any one of those boxes. Now, if you find the private key, you can open any of them if you have the right key. But you have to find out where that key fits. The challenge with crypto is that there's so many mailboxes or so many locations where these cryptocurrencies are stored. So if you have a private key and you lose it, that lockbox is now essentially sealed forever. No one gets it. There isn't like a bank that can say, well, these deposits have been left here and they haven't moved for 5 years. We're just going to clear those out. It will stay in that location forever until somebody gets that private key and opens it up. At the top of the program, I was telling you guys a story, which I'm probably loose on the details because I just really quickly read it. But this kid from the UK, he was an IT guy. He was mining Bitcoin back in 2009, 10, 11. And I guess 2012, he threw away his computer to a landfill on accident. And he had something like 7,000 Bitcoin. The current value was supposed to be like $270 million. No one will ever get that money unless they have the private key to that address. So this guy's done. He's screwed. He can't get it without that private key. So somehow he must have written down the private key on his hard drive or have something on there. Otherwise, that money's gone forever. No one collects it if it's gone dormant forever, which is why I think from a math perspective, cryptocurrencies are so exciting. Or cryptocurrency, let's just say Bitcoin's so exciting. Because every time somebody loses their private key or loses any amount of Bitcoin, that's that much less than the total amount will ever be. It's declining. You're seeing a balance decline. So you have supply dropping and demand going up exponentially. That's why I think these forecasts for Bitcoin are so high, is because over time, more people will lose their private keys. So be careful. Very, very careful with those. All right, time for Tom's question. Tom says, when trillions of dollars are printed, some money gets into Robinhood accounts or other retail routes. What other ways does it push the market? Are institutional investors accessing some of the funds or leveraging because of it? No, I don't think so. I mean, obviously, the immediate takeaway is that the retail population is going to go spend that on stuff. Last time we got it last year, it was fantastic because Walmart had a deal on, it was like a 75-inch TV for $1,200, which was the exact amount of the stimulus check. I thought that was clever marketing by Walmart. But bottom line is, the vast majority of Americans are probably going to spend that on stuff they just don't need. That'll go to, I don't know, DoorDash, buying stuff on Amazon. So who will be the big benefactor here? Yeah, I think retail sales end up being the biggest benefactor, but are institutions leveraging for that? No, I think that's just going to continue to drive certain market segments forward. Now, the bigger bulk of money is going to corporations. You got bailout packages, not bailout, but PPP money, and $1.9 trillion coming through for this next round. That's a lot of money coming into the markets, and that certainly is good for the overall market. For those who are owning shares or have longer term positions, that's a great thing. For the individual people, I don't know. I think I don't think it's that good of a thing. It's a small token when I think the average American should be getting much more. When you do a relief package, a stimulus package, and it's for $1.9 billion or trillion dollars, excuse me, that $1.9 trillion in its entirety should go to the people. It's basically take $1.9 trillion, divide by the number of people, and that's the check that gets cut. Reading through those contracts, and it wasn't a Democrat or Republican thing. It was just saying, looking through the 5,000 pages for kind of highlights, it was stupid. It's this dumbest stuff on earth was in there. It was ridiculous. West Virginia gets a new state park. What the heck does that have to do with relief package? Stimulus. Anyway, there you go. So that's my thoughts on that, Tom. I don't think that there's really any other way. I think it's just the common thing is, where is this going to impact? Some people will be smart with it and go and pay down debt, which is what you probably should be doing. Most are probably going to go and blow it on stuff they just don't need, which of course drives up your Ross stores, your Walmart, your Amazons, these types of companies probably going to do rather well because of it. LG says BTC and GBTC are like having bullion versus gold, right? No. So remember, Bitcoin is the physical. So if you had BTC and you owned it, that's like gold, and you physically own the gold. It sounds weird because you never actually physically own Bitcoin. You just own an address. All you do is own a location. That's the weird part about crypto. But I physically own it. So this would be my gold nugget right here with Bitcoin on it. GBTC is a trust fund. It's a fund that buys Bitcoin based off of how many inflows or outflows come out of that fund on a daily basis. Their goal is to have one Bitcoin, per 1,000 shares. So that's how they split it up. So I don't know if the comparison is right, saying one's gold versus bullion. One would be, let's see, BTC would be like owning physical gold, and then GBTC would be like having it at your bank. That's pretty much what it would be. You have an IOU for whatever gold is there. So that's pretty much what it would be. All right, Alex, thank you for keep asking because I keep forgetting. What are the best times to use the daily, weekly, monthly charts? 5, 15, or 4 hour? Well, it all really depends on the style of trader that you are. You mentioned, you heard Bob Dunn yesterday saying he likes to look at things big picture, weekly, all right, monthly, weekly, and then daily. Smallest time frame he looks at. I don't think that there is a best per se, Alex. It really goes to what you want to look for and what your style of trading or investing is. For one, I love short-term intraday stuff. I like the action of getting in. I haven't done too much recently because I've been so busy with other stuff, but I love short-term intraday trading. So I'm probably going to start things off like this. Let me bring up a platform. Usually, so let's say I wanted to go look at, she's shorting that shooting star on JP Morgan today. Okay, oops, JP Morgan. By the way, we'll look at their earnings. They came out with amazing earnings today. So let's say it was yesterday and I wanted to short this. Well, you know what? Yeah, I'll do that. You see there's a small little shooting star that happened on JP Morgan. We looked at that yesterday on the show. The hard right edge of your screen. One more. Gosh, there it is. Right? This small little green candle here. We put this line at 140 on JP Morgan's and look, short below that. When it gets below that, you're shorting JP Morgan. So I would start by looking at this daily time frame. I'm looking for a couple things here. I'm looking at the candlestick formation first and foremost and say, ooh, that's attractive. And then I want to know also, has this come into any area of supply? So what I would do is I would zoom out. And unfortunately, with this one, it's not going to let me see anything. There's nothing on this chart. Okay, so we're actually right at supply. I actually like this now. This actually looks very appealing. Oh, that's why I'm on this design tool. Come on, Merlin. I'm having drawing issues. There we go. I actually really like this. It looks like a giant double top formation. It's coming right out of that supply from back in December of 2019. So now all of a sudden, I like it. I'm going to want to look at it maybe on a smaller time frame. So I'll go to a 240-minute time frame just to break down this picture a little bit. So when it opens up the next day, I can check it out and see where it's going. And then I might go down to the 60-minute time frame. And then I like to go, the smallest I'll go is all the way down to the 5-minute time frame. So, if you're intraday, most intraday traders are going to be looking at daily, 60, 15, maybe 5-minute charts. Longer term, they're going to be looking at, for Bob Dunn, it's weekly, monthly, daily. But I like to look at things from multiple time frames. And I think no matter what style of trader you are, you should always look at multiple time frames. Why? Because if I turn my back to you right now and said, what color are my eyes? You won't be able to tell me. You need to turn and look from different perspectives. And to me, that's what looking at things from different time frames does. It may show you a level of supply or demand on the 15-minute time frame that when you look at the daily chart, you just don't see it. That's why. What habits do you feel? Alan says, what habits do you have that enable you to be a successful trader? I know journaling is one that you might not do anymore. What about morning routines? No, I don't really have morning routines anymore. I used to, which was I would come in. First thing I would do is go to Yahoo Finance. And the Yahoo Finance page was simply to say, what are the sheep being fed? What information is being shoved down the retail population's throat? And that would set my tone for the day. Generally, whatever Yahoo Finance tone was, if it was overly bullish, then my bias for that day was going to be bearish. But I wanted to let the market give about 30 minutes in as those retail traders got in there, jack things up, and then I could come in and short it to the south side. That was part of my routine. Not really anymore. I still look at Yahoo Finance, but I don't like getting up that early to trade equity markets, which is why I love cryptos and Forex and futures, because I have a 24-hour type of market where I can be trading in, and I don't have to be stuck to the waking up really early. I'm a nocturnal person by heart. So other routines, I mean, really, it's just the analysis. It's how I'm analyzing things. I'm running through, like Corey Lane was saying on Tuesday, I'm running through watch lists. I'm looking through specific setups. I will go through a list. I'll show you guys here. You know, I could look at this big list of hundreds of different stocks right here, and all I'm going to do, now this is on a 5-minute, I always do my watch scan on a daily. And let me zoom out here so I can see if there's anything that looks appealing. And I literally hit it. I'll keep it loud so you guys can hear the keyboard hitting enter. Boom. I'm hitting enter, and you see it's changing. I'm just looking for a setup that might look like something appealing to me. I kind of like Amgen simply because it's almost above this area of supply. Yeah, it's already through it. Never mind. So we'll forget Amgen. But I'm literally, that's how quick it takes me. I'm going through going, nope. Right? And a lot of people will spend a lot of time on a chart. This one looks very similar to what we saw with Tesla, right? This is a bullish flag formation. So I don't even know what Abel Marley does. Alby Marley. No idea what they do, but the pattern looks rather bullish. And what's nice about a formation like this, you know, and that goes right back to that chart formation I drew earlier, which is this bullish flag. There's your pole, and then I'll do a yellow box here. It should really be more of a triangle, but I would really just put a range around that and say if it gets above that blue box or yellow box, I'm going long. If it gets below it, I'm going short. Simple, easy, done. But anyway, you know, there's hundreds of stocks here. It doesn't take long to flip through and real quickly just say, yeah, no, not liking that one. But like Bob Dunn said, I'm looking for specific formations. I'm looking for something that jumps off the screen at me. This one actually looks pretty good. The Kraft Heinz Company, because you had an aggressive sell-off from about 35.50 all the way down to sub 32 and came right into an area of demand where I would be an interested buyer. Let's see, a few other things. Alan says, move to Texas. No. I mean, if I own real estate in Austin, but I don't see myself in Texas. You know, it's really, to be honest, guys, and I think I actually have it right here behind me. If you look at the map of the world that's behind me here, I actually had this for multiple reasons. And years ago, I had one that had the time zones on it. And I took a pen and like a highlighter, and I painted over the areas that I just could absolutely not live in. Right? I could not live in these areas. And that was pretty much from California east. I know, New York I could do, right? 9:30 in the morning. But you know what's better? Did you realize how far Brazil is east? Equity markets open at noon in Brazil. Now you're talking. That's more my style. Of course, you go over here into Europe, Italy. It opens at 3:30 in the afternoon. I like 3:30 in the afternoon. That's a good time to get up. So this area is over here. I'm not sure if I'd want to go to Nigeria or Mali or anything like that. But, you know, when you're looking at the equity markets exclusively, that's kind of what I was looking at. Is saying, these are the locations that I would be happy to be trading. 3:30 in the afternoon. I mean, when I lived in Italy, that really was one of the best in the world. So all of Europe is an ideal time to be trading U.S. equity markets. Congo for the win. Yeah, I'm not going to go to the Congo. Maybe Cape Verde, right? You know, some nice tropical destination. That's good stuff out there. Amsterdam would be good too. That's the same. Amsterdam, Germany, all those places. Europe, it would be great in general, but I want my dollar to be very, 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 very strong. And then I'll consider moving over to Europe when the dollar buys me a lot more. Something I learned many, many moons ago. Patrick says, what's the Bollinger Band percent on your screen? Okay. So one of the things people like to do is they will, let me add on something here, and it's just a shortcut. Bollinger Bands is what you see on my screen right now. And all it's saying is there's a statistical probability. It's bell curve type stuff. So you want to go back to statistics. Basically, there's an average here, which is this line in the middle. And then two standard deviations, I believe, if my memory serves me correct, is supposed to incorporate 96% of the data in a study should fit within two standard deviations of the mean, which is this 20-period moving average in the middle. So what it basically says in a nutshell for you non-geeky people is price has a 2% chance of being below this lower black line and a 2% chance of being above it. So it really means it shouldn't be outside that area. Now I can run through chart after chart after chart looking for something that's outside of it, but I added this filter which I love. It's called %B, and all I'm doing is saying, show me something that's out. Where is price now in relationship to its Bollinger Band? So you guys see these top 4 are negative. That means that these are outside the lower Bollinger Bands, LVS. Look at it, it's broken below its lower Bollinger Band. It shouldn't be there. That's a breakdown. VRSK is also below its lower Bollinger Band. And so instead of me having to spend thousands of hours looking individually, I can simply filter and say, these 4 are way oversold. And I can also look at these and say, these guys here, way overbought. MAA, way overbought. It's 15% above the upper Bollinger Band. That's a huge extension. Same with AVB, Kroger, right? These are all companies. So it's basically just a simple piece for me to, I guess, quickly analyze a portfolio for specific setups. You know, and what's nice about it is if I find, let's say this UDR, right? I don't even know what UDR is. UDR. Let's say that this candle broke out of this upper Bollinger Band where it shouldn't be, and it's coming into a supply level. Now all of a sudden, I start to have higher probability setups that are working based off of an overbought situation. Well, Alan G says, yeah, but overbought equals you should short. Not necessarily. Not necessarily. Things can be overbought for a long period of time. What it's saying is, if something is above its upper Bollinger Band, yes, the textbooks will say, this is why you never trade textbooks. Textbooks say it's overbought. But if it's overbought, it could lead to more overbought. As you saw over, let's see, what do we have? On this guy here, you can see in UDR, it was overbought here, it was overbought here, it just kept on going. You know, there's other ones where I've been trending very strongly and it was overbought and overbought and overbought. At one point, this was above its upper Bollinger Band. So it just means you should think about it, but look for a better setup. So if I have something that's overbought and it runs right into a supply level, I'm feeling much more confident. Again, you're shorting something that for whatever reason is really strong, or if you're buying the other way, you're buying something that for whatever reason is very weak. So, you know, catching that falling knife. Sheena, welcome. Good to have you with us today. Yeah, 10:30 p.m. You know, it's funny. I traveled to Thailand, one of my favorite places on earth, and one of my favorite moments from Thailand was I was with some friends, had a laptop, and I asked the local coffee shop, I say, can I connect to your Wi-Fi? And this is years ago. This is 2004. Oh God, I'm that old. It was before the tsunami. It was 2 weeks before that tsunami. Anyway, I sat outside. I realized I was trading on a shady internet connection. Someone could have stolen information. And I just sat out there. I had my shorts on, a Singha beer on the little stand. My feet are in the sand. I'm facing this beautiful ocean. And the party going off to the left over here. And I made a couple of trades. I made $200 in just a very, very short period of time, like half hour. Made $200. And I stopped and thought, $200 in 30 minutes. And I'm on a place where $200 goes a long, long way. I said, this is good. Life is good. But unfortunately, 9:30, that's right as it starts getting heated up fun over there. So I don't think I could do that. Anyway. All right, I got to wrap up. I got too much stuff I got to do. It's Friday. I'm going to finish this glass of whiskey. Normally, you guys get me to go through one glass of whiskey, but I haven't really taken a break from talking for an hour. So what do I got for you to wrap up here? Let's see. There was that piece. Oh, let me show you that. We didn't talk about JP Morgan, we didn't talk about Citigroup, and we didn't talk about Wells Fargo. This, my friends, will require a small sapsule of whiskey. Oh, Matic, didn't even have a real mustache back then? Hey, I still don't have a real mustache, buddy. And here's your earnings for today. I want you to notice the surprise column. I think it's kind of interesting. All three of these, actually all four, which are financial companies that reported today. At the top line there, you see JP Morgan Chase. They reported earnings. A huge surprise, right? They beat by 39%. They were $1.07 more than expected on their earnings. That's a 47% year-over-year increase for JP Morgan. Really good. A lot of it, the big gains there coming because of credit. So JP Morgan, you'll notice there's a theme here. JP Morgan did really good with their credit division, right? Making money off of lending. Citigroup, though, you see they beat by 53%. Theirs was an even more impressive beat, but the share price was down 6.6% today because they had huge expenses. They also had declining debt, declining their underwriting of debt. So while JP Morgan is doing great with their credit and things like that, Citibank's trying to issue debt. It's not happening. And also their corporate lending was down big. So while they both had great numbers on the end result. It's where that money came from in their business operations. One really did extremely poor with regards to their end of day. All of them were down, by the way. You had 3 great beats for financials, but what that tells you is the expectations have been set too high. Analysts have been giving way too much emphasis on their earnings and expecting so much out of these banks. JP Morgan, Citigroup, and Wells Fargo, the top 3, they're all beat. Yes, even Wells Fargo beat, even though they had a decline in customers and business lending that was down 7.8% today. So this is not a good start to earnings season. It's weird because all of them beat, and you're thinking everybody beats, market goes up. This is why I don't trade earnings. All 3 of those companies, to me, represent a very, very important sector for the market going forward, which is financials. Now, next week, you've got Goldman Sachs reporting, you've got Bank of New York Mellon, you've got Huntington Bank shares, you've got Ally Financial, Charles Schwab. It starts to become much heavier with earnings season. And if these guys had blowout earnings, yet their share prices are down 6, 7, 5%, that doesn't set a good tone going forward. So I was a little disappointed. I kind of thought about potentially getting some put options out there today. I didn't do that. I kind of wanted to, but I didn't. At Carnival, they were supposed to report. As you guys can see, they've done this for month after month. They were supposed to report, but they didn't. But I don't think they want to report because you're just going to hear this gurgling of water as this ship is tanking. Yeah, exactly. The CCL is riding that Titanic. Come on, king of the world! It's probably giving the CEOs time to dump all their holdings. But even PNC Financial down here at the bottom, that was another big beat on earnings, 23%. I mean, you beat 23% on earnings, you should be doing pretty well. And as I mentioned, year-over-year earnings growth for JP Morgan is up 47%. I mean, that's great. If you get 40% year-over-year earnings growth, I mean, your chart should be a 45-degree line going straight up. Is JP Morgan's a 45-degree line going straight up? Let's look at JPM. It's not, but the last a little bit. You had a pretty aggressive run, but I would definitely expect this to have some pullback here. Even though you had a green candle today, it was down. You see all these. There's a lot of gaps. Let me close the Bollinger Bands. You can see there's a lot of unfilled gaps. There's a gap around 133, another gap around 127, a huge one down in that 110 to 105 level. So these are all major holes that I think will be filled eventually, and it's a bad start. It's weird because if you're new to the markets, if you're just reading what the headlines tell you, it's good for the markets, right? They all beat, but it's not the numbers anymore. It doesn't matter what those numbers are. It's did they meet analyst expectation, and what are the thoughts on the markets going forward? And with banks in particular, where did they make their money? It was interesting seeing that JP Morgan's theirs came from credit. Right, loans, whereas that's where Citibank and Wells Fargo actually hurt this quarter, and it brought them down even more. Yeah, that's true. That's true. I just meant, Alan, it was just a statement that if you have 40% year-over-year growth, your price of your shares should be going straight. Now, going back to the comment about Tesla, I was reading that their annual compound growth rate right now is 52% a year. That's probably why you're seeing more and more money pour into that. Now, that to me is completely unsustainable over the course of 10, 15 years. But right now, they're in an absolute gangbusters growth phase, and you're seeing huge moves up in Tesla because of it. 52% annual growth rate is phenomenal. All right, last pieces here. JP Morgan, bunch of crooks. Aren't they all? I mean, look, Brendan, they're a necessary evil, right? Got to have a place to put your money until the world wakes up and decides I can do it all on my own by using digital assets and DeFi. Yep. Okay, let's go to, this was what happened out there today. Monday, you have Logitech. It's the only company reporting earnings on Monday. All right, for your economic calendar, here's what you had today. It wasn't very good. Honestly, you look at the numbers that came out with retail sales. We had a decline in our month-to-month over retail sales last month of 1.4%. So obviously we did better than that. But the expectation was we were going to go back to zero. So a steady increase, getting out of that negative territory. We're still in negative territory. You see it says negative 0.7 on here. I'll grab the pen and draw it out here for you, so you guys can see what I'm talking about. I'm talking about this number right here, at negative 0.7. That was worse than expected, and also core retail sales was pretty ugly as well. That was worse than expectation. So those two didn't really help. Producer price index was no big deal. We didn't really see much with regards to rising prices. And this number here, I mean, it's nice that we're above zero for the Empire State Manufacturing numbers, but it's dropping. It's getting closer to zero. You know, that impact of more shutdown, I think, is starting to rear its ugly head. All the other numbers, industrial production actually look pretty good. This is a positive one down here. But the retail sales was the spooky one of the Empire State Manufacturing numbers. Okay, that's going to do it for me for today. What time is it? I'm getting out of here in under an hour. Yeah, take that, Big Ab. I'm getting out for under an hour. It's 83 degrees here in Southern California, so for all you guys on the East Coast, enjoy your parkas. I'm going to go throw on some shorts and flip-flops and go down to the beach, maybe take my dog for a walk somewhere. So hope you all had a fantastic week out there. Yes, Logitech is actually going to probably have a blowout earnings, right? I mean, you think of webcams and keyboards and mice from everybody working from home lately and starting up their own shows like this. Yeah, I think that Logitech can probably do pretty well. That's going to do it for me for today, guys. I do have a busy week next week. I've been trying to get more guests on the program. I know, because you guys probably get tired of listening to me talk every day. Do you realize how difficult it is to talk for 1 hour straight without any script every single day? And it gets a bit challenging, but I enjoy it. So love when I have guests on the program. I have a couple lined up for next week. We're going to have, let me just get my calendar up here. I want to make sure I have it all in front of me so I don't mess up any names. I've got, now Monday we're closed, right? So no show on Monday. I'm not going to do a show on Monday. It's Martin Luther King Day. I've got Bill Addis on Tuesday, so we're talking bonds with Bill Addis on Tuesday. I've got Tilly Allison on Wednesday, and Thursday is open. So we'll see you guys. I'm not going to see you on Monday. Hope you guys have a fantastic weekend. Stretch it out a little bit. I will see you on Tuesday with Mr. Bill Addis talking bonds. Again, if you like the show, click the thumbs up. If you are new, do me a favor, go ahead and click the little thumbs up button or subscribe to the channel. Appreciate it. Thank you guys so much. Have a fantastic weekend. Be safe out there. I will see you on Tuesday.